What if I told you that one company just added more market value in a matter of weeks than many Fortune 500 companies are worth? Just a few months ago, investors believed Apple was falling behind in the AI race. Today it's setting record highs, and some analysts are asking whether it could eventually become the world's first $5 trillion company. So, what changed? Is this one of the biggest investment stories of the year, or is Wall Street getting ahead of itself? Stay with me, because by the end of this video, you'll understand exactly what's driving Apple's rally, the risks investors shouldn't ignore, and the key events that could decide what happens next.
Apple's recent rally didn't happen overnight. It wasn't driven by one announcement or one product launch. Instead, it was the result of several smart decisions that gradually changed investor confidence. As artificial intelligence became the biggest story in technology, many people believed Apple was falling behind. But Apple took a different approach. Rather than rushing to impress the market, the company focused on building AI into products that millions of people already use every day. At the same time, Apple continued reporting strong earnings, expanding its services business, and digital services all work together to create an experience that's difficult for customers to leave. Investors also see a company with strong cash flow, global reach, and a long history of innovation. Those strengths helped rebuild confidence on Wall Street, and that's why many experienced investors focus less on daily headlines and more on the long-term story behind the business. As confidence in Apple continued to grow, investors began asking a different question. Instead of focusing on what the company had already achieved, they started looking at what could happen next. But experienced investors understand something important. A rising stock price doesn't automatically make a business more valuable overnight. The real question model. While the iPhone is still its most recognizable product, Apple is much more than a smartphone company. Macs, iPads, Apple Watch, AirPods, subscription services, digital payments, cloud storage, and software all work together as one connected ecosystem. That diversification helps reduce dependence on any single product and has allowed Apple to remain resilient through changing market conditions. Professional investors also compare Apple with other technology leaders. They don't just compare stock prices. They evaluate innovation, financial performance, customer loyalty, competitive advantages, and long-term strategy. Those comparisons provide a much clearer picture of where Apple stands today and where it could be heading in the future. Large institutional investors, including pension funds, mutual funds, and asset managers, often think different business fundamentals. They study management decisions, financial strength, and the company's ability to create value over many years. That's what often separates long-term investing from short-term speculation. Innovation remains one of Apple's greatest strengths. Every year, the company invests billions of dollars into research and development. From artificial intelligence and custom-designed chips to software integration and future technologies, Apple continues building products designed for the long term. For many investors, continuous innovation is one of the strongest signals that a company intends to stay competitive. Another important reason for investor confidence is Apple's financial strength. The company generates substantial cash flow, maintains a strong balance sheet, and has the flexibility to invest in future opportunities while continuing to reward shareholders.